I think the biggest risk we're about to take for, let's say, 3-year risk
Hmm.
is a ridiculous bubble. I think there is a growing, big, huge possible narrative of having a 1999 style bubble. I have a feeling we have a probability that is increasing that we've reduced the biggest left tail risk in the world, and nobody yet knows this. And if that's the case, that's going to ignite a super bubble.
Raoul, founder and CEO of Real Vision, is predicting a widespread super bubble in the financial markets that would cause asset prices to skyrocket almost overnight. He likens this imminent bubble to the market bubble of 1999, which was characterized by excessive speculation in the technology and internet sectors. During the late 1990s, investors poured vast amounts of money into tech companies, many of which had little to no revenue or profit, believing that these internet-based companies would revolutionize the economy and generate massive future returns. Fueled by the rapid rise of the internet and technological advancements, tech company stock prices soared, with initial public offerings of tech startups becoming highly sought after and valuations reaching unprecedented levels. Traditional valuation metrics were largely ignored, replaced by optimistic projections and hype. However, by early 2000, the bubble began to burst as investors realized that many of these companies were overvalued and lacked viable business models. Stock prices plummeted, leading to massive losses. The Nasdaq Composite, which had doubled between 1999 and early 2000, lost nearly 80% of its value by October 2002. The collapse of the bubble led to a broader market downturn and significant loss of wealth. Powell believes we are nearing another super bubble that will cause asset prices to appreciate significantly before everything comes crashing down when investors realize the folly of their actions. According to the Real Vision CEO, this impending bubble could be the biggest threat to the financial system in the immediate future. During a recent discussion with Coinbureau's Jessica Walker, Powell also shared his views on the U.S. election and its potential impact on the markets, particularly the cryptocurrency market.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Violence is obviously likely to happen at some point in this, just because of how divided the society is. But when you narrow everything down, the outcome for everything is printing money. So the worse anything happens in the US, the more likely they are to print money. So election years tend to be very, very positive, and the year after for risk assets, just because everybody's buying votes and then kind of proving themselves afterwards and mopping up the pieces and paying that interest on the debt. So there's that military side. You've then got all the retirees with the baby boomers with all the votes. Well, they want their healthcare. And then the third part of the equation is somebody needs to pay the interest on the debt. And the only way of doing this is the magic money printer. You can see there's a shortage of dollars around the world, right? We lost US banks. We lost a giant Swiss bank. We're losing dollar yen, right? That's a shortage of dollars. And we've got Yellen going to China twice, right? She's there because her other job outside of getting Joe elected is to sell bonds. She's the Mike Milken selling junk bonds, going to China doing the roadshow. China's like, yeah, we'd love to buy your bonds, but we don't have any dollars. So you give us dollars and we'll buy bonds. So they have to figure out how that can be done. Now, nobody really wants to give China direct swap lines. They probably do it through Japanese bond intervention, by currency intervention. Either way, the G20's coming up or G7's coming up. There'll be some magical allowance for everybody to have enough dollars for the system to move forward and everything to happen. I think the biggest risk we're about to take for, let's say, 3-year risk is a ridiculous bubble. I think there is a growing, big, huge possible narrative of having a 1999 style bubble. I think if there's a risk of that, then you get an overhang, and you could skip a crypto cycle, you could skip a tech cycle like we did back in 2003 to 2007 or something like that. So that's the biggest risk. I think all left tail risks have been removed, all of them. I actually personally believe that China and the US are agreeing or have agreed to negotiate Taiwan in exchange for Taiwan semi. There's no other outcome that can happen without them going to war. And actually, they can't afford that war. Nobody can. I've been observant of Gavin Newsom and that weird trip to China. Now, Gavin Newsom going to China, normally he'd be met with somebody lower down. He meets with Xi. There is only one reason he's coming with the gift. The gift is, let's talk Taiwan. Then Gavin brings Xi back to the United States. When they're saber rattling at each other, Xi suddenly turns up. in San Francisco, of all places, not even DC. And Newsom is geopolitically squeaky clean. He's not involved in anything. So he's gone there like, I've got no beef with you guys. I'm just a tech guy here over in California. Let's talk Taiwan semi. Let's talk. And the US is building 3 Taiwan semi plants. Germany's building 1. Japan's building 1. They're probably all built within the next 4 to 5 years. Then everybody's got the technology that can be shared. And I believe that if they say to China, listen, let's organize something here. You can have Taiwan and Taiwan semi. We'll split Taiwan semi. We'll go our own ways, split AI amongst 2.
Other prominent figures in the cryptocurrency industry have been discussing the importance of the 2024 US presidential elections for several months. According to renowned macro analyst and business executive Raoul, the election makes it almost certain that the Federal Reserve will reverse its quantitative tightening measures, which would have an immediate effect on prices, particularly crypto assets. These assets have been known to significantly outperform the Fed's balance sheet. Additionally, Powell suggests that politicians will try to influence voters by sending out stimulus checks, which would also contribute to significantly higher prices. He believes these actions will push the markets into what he calls the banana zone, with massive price gains expected in the coming months. However, there is also the potential for something to go horribly wrong. In the interview, Arthur and Powell discuss early warning signs and what might happen to crypto asset prices if things go awry. Here are more clips from the video.
If you think about the biggest risk of the last cycle was a centralized counterparty getting into credit, right? And so usually the issues in crypto are we love decentralization, but then we want to make money. So we go do centralized stuff and we bid up the centralized stuff until they blow up, invariably blow up because their business models are incompatible with decentralized bearer assets, right? And this has happened over and over and over again. So how do I think this could play out in this particular cycle? What are the centralized entities that we trust and are basically driving this bull market? ETF fund managers. What do they all do? Custody their assets at probably just Coinbase, maybe a few banks if one of these rules in the US passes. So what are we going to do? We're going to accumulate, hundreds of billions, maybe even trillions of dollars worth of crypto and probably, less than 20 firms who are all going to custody with probably less than 5 institutions. Now, I don't know if any of you have worked at a bank, but the people who make the least money have the most important jobs at the bank. That's the people who are in the back office dealing with FX reconciliation or making sure your stock clears or all the different things. And so if you think about at a custodian of crypto in a TradFi bank, because now they want to get into doing custody because they see Coinbase making all this money from BlackRock and all these guys, and the regulations force you to custody with a third party. So why don't they force you to custody with BONY Mellon or one of the standard people? So now you have all this crypto in these firms where the person who is probably the easiest to get hacked probably makes like $50,000, $60,000 a year, who's completely overworked, has no respect at work, and they don't give a fuck about internet security. It's not fucking. If I'm going to hack crypto, I'm going after one of these banks who internet security is just like an afterthought. They have no clue what they're doing because never have they had to custody an asset, or if they lose it, they don't get to call up the treasury or the Fed and get another bailout. You can't get bailed out of crypto because there's no one to call to create the Bitcoin out of thin air or the Ether out of thin air, whatever it is that you on your balance sheet. So if I had to think about a risk, and this is sort of, a 2 to 3 year risk, given how I'm seeing things change in terms of who is allowed to do what, and what's driving the market, I would say that a major crypto custodian gets hacked and they lose, $50-100 billion. That's how I could see this cycle ending. And
it'd be unlikely to be Coinbase, so they kind of know the game.
Yeah.
But it's all the new people who, as you said, have no clue of the complexity of bearer assets because they got rid of them all. The other one for me that I observe, and it's a great business, but 90% of the entire option market is a deribit. That's the entire option market of crypto, billions and billions of dollars. There's a risk there. There's a risk there because the amount of people who use that one counterparty as the centralized place for options, all the OTC options get laid off there. So that's another risk factor. We need more option houses, some exchanges, platforms, everything, just to stop concentrating it because there's a lot of use of derivatives now in that part of the world, and we don't know who's going to end up holding the baby when it blows up. And these aren't predictions, just so everybody's clear. These are identifiable risks that people may not see. This is not, because I know what the internet's like, this is not Arthur and Raoul saying, yeah, they're going to go under, they're going to go under. It's like, no, these are pockets of risk that we can see that could be systemic. Because somebody at the end of the cycle will blow up. We just don't know who it is.
Yeah.
And it's always for the same thing. You try and add leverage to a 70% volatility asset, you will always blow up. 100% guaranteed. You just don't know who it's.
A widespread market bubble will significantly impact the cryptocurrency market, potentially driving assets like Bitcoin, Ethereum, and Solana to new all-time highs. However, every bubble ultimately results in a crash and a severe market downturn that could quickly affect every sector of the economy. Please share your thoughts on Raoul Pal's outlook and predictions for the market and the overall economy in 2024 and beyond. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.